combination that I started doing of recent, because over the past weeks I've been using crosses to trade and it's going very well. Although I've been using Elliot Wave, for those of you that know how to use Elliot Wave, it's always advisable that you try to get indicators that will help you to have good entry and exit points. But here I won't be talking about Elliot Wave. What I'll be showing you is how I use my crosses and Fibonacci to set up my trade, and how I use it to take profit at each levels that I come into the market. As a moving average cross trader, what I usually do is that I follow the golden crosses. You can see it here, and the dead crosses. What I mean by the golden crosses is that whenever they cross the lower moving average, here is 10, this one is 10, the red line is 10, this one is 30, and this one is 50. So whenever I have a cross, the 10 crosses 30, it gives me signal for sell in a downward direction. Whenever it crosses it upward, it shows a buy signal, so I follow it up. But along the line, notice that when I trade this, and this is 1 hour chart, and you tend to see pullbacks, you tend to be confused. You are usually confused because these things might knock you out, especially if you enter here, as when you saw this trade here and you decide to go in for buy here, and this moved up and suddenly you have this, you'll be confused on what to do. But you don't have to be. Once your system is right and it's working very well, you shouldn't be afraid of what is happening. So here what I usually do is that I trade these crosses as it's happened, but it's always good to redefine your system. So what I do is that I imported my Fibonacci retracement tool, and what I usually do is that after the cross, I will take the candle that crosses this. I will now draw my Fibo there, like you have this. This is the candle that pulled, and this one followed it, that break this line, causing these crosses to happen. So I will now draw my Fibo and I will trade the level. So this is what we have here. Okay, fine, that's it. So having drawn this candle here, and we saw this thing hit 161, let's assume that when we have this market, we decide to go targeting 261, and we entered our trade here. Maybe we missed out these ones in order to get confirmation after this news effect we are seeing here. So we traded this thing upward, and we entered here and we traded it to get to our 261. Then we collected our profit as soon as we start seeing this thing forming. Maybe here is where you booked your profit. If we use our crosshair, you will see the pips that you would have gained. That is 31. You can see it. That is 38 or 440 points. That's what this. But from here to here, you have your 721 points. They have gone up, but maybe because of your trading, you're able to book it at 261, or if you're not lucky enough, you're able to book it here at 404 points. That's a good profit. So Fibonacci is a good tool that one should always employ when trading. It will help you to know levels that markets react, because the issue that most investors, they use this. These are people that make the major move that you see here in Forex. So if you are to draw this our Fibo here and try to get it to, you can find out that from here to here is where the cross happened. So let's assume we take a point here and we draw a level. Did we catch the whole thing? Let's see. Did we catch the whole thing? Assuming we started trading, maybe we entered here targeting 161, we got profit, right? From here to 261, we got profit. From here to here, we got profit. Now when we booked our profit at 423.6, see what happened. The market then tend to pull back. We now see a major correction happening, as if it's trying to touch here. Now by the time we got to this point, we have already made profit trading these levels. You can see we've already made profit. If you use our crosshair, let's calculate from here to here is 2024 points. At standard lot, which is 1.0, you have this to be $2,059. At mini lots, we have that 0 point, you have this to be 134.7. At micro lots, we have it to be $13.47. So if you have been the one trading and you follow this your fiber combined with your cross, you see that you'll be making a good profit. Now after this thing have happened here, and okay, you aren't trading when these things were reacting until you find out that these have formed, what do you do again? Take out your fiber in order to follow a new level that have been developed here. So you now plot again. What do you get? A good signal to trade. But in this point, it didn't get to 423.6. See, the market started trending again. You saw this go up one, as you can see this here, from here to 161, 161 to 261. You can see it here. Then we now saw another reaction going down. You can now see it. Now get back to our 161. What do you see here? Then you see that the news, everything keeps falling in place. So in actual sense, you see that the news effect with Fibonacci, you can see that everything is in place. Let me take this out. Okay, you see that everything is in place. You can see it. So this thing has been a retrace backward, causing us to have a downward market. Remember, we are taking at the crosses. You can see this thing happened as though it wanted to cross here, but it didn't happen. So we now say we drew our fiber after this reaction here, and we now got another thing here. So as we traded this one too. See how much we would have made. As we entered here and we traded it here. See another 2,129 points. You can see. So this is a huge thing that when you combine with your trade, you see that we're making good profit. You can see it here. So as you still have this your Fibonacci level still drawn here, you find out that these things pull back. These are retraces, and you find the market going down again, and you keep drawing it. Assuming here too that you find this thing. So I'm going to take these ones out. Let's be taking it down gradually. I hope you got what I did there. So if you decide to take this thing again and draw a fiber here, this is the candle that break this line, and we now want to take it and see, okay, our fiber level. Now do we have here? Okay, when this line was broken, you can see it. As when we traded to get to maybe 161 with this our method, we wanted to get to 161. You see that the first news that happened, because you entered here after this, the first news that happened actually broke 161, but you can see that it's actually like a chaos of which you would not have seen if you are using only crosses. You wouldn't have seen this if you are using only crosses, but with your fiber levels drawn, you see that that chaos is controlled chaos, causing the market to have a pattern. So now when you look at it again and you find out that this again went up, breaking these levels, you know, this is 6150, 6150, 38, 22, 0, and then now pull back again. You can now see, you can see what's happening here. So what else again? If you see, draw it here from the candle that crosses, you see this will be our 161. Let's draw our fiber level and see candle that crosses. What do you get? Okay, it's even. What do you get? 161 broken, couldn't get to 261 before pulling back. So this would have given us a profit at this between 100 to 161, and this one too, if we actually followed it right. So you can see that. Okay, let's draw this very well. I think you didn't put it. It should be at the candle shadow. Okay, fine. So we now have it. Did it work well? Yes. See it here to 661, then it pull back again. Let's take this again. I'd like to show you things, how these crosses can work perfectly fine when you have your Fibonacci drawn. Take this again. So you see this cross here, we can still go down and put it there, and you can see another cross. You can decide to take here to here. Okay, fine. We have our levels drawn. What does that tell you? Did you get it? You see, how does this look? 161, 261, pull down, didn't wanted to correct, then pull down again, 4263. What do you expect? Market now pulling back again to 261. So if this 261 is broken strongly this week, you can now see it, you can now see that it will still go and test 161. So you see that this thing is not like it's in a chaos, it's controlled, it's happening, and people are trading this thing. So for my prediction for this week at the end of this video is that for our gold spot, that is this XAU USD, you have it that is going to 161. So once the market opens and opens somewhere higher, so we're expecting a trade that will get to this point. Remember, we have to protect our trade. We have to protect our trade. Maybe okay, got the setup, can take this thing here. So the thing is that if the market opening for this week opens above or at this line 261, we should be watchful to see what will happen. But once another price opens after some hour above 261, it should be traded to this point 161. So if this is traded this week, not this week, let's say in the next 24 hours, you see that you'll be making, if this thing works very well here, this is what you will gain. Okay, this is 950. So what you're targeting is that gold is likely to get to 135, okay, 1350 before the close of today. And again, if it happens to pull back, then we know what we're going to do is to keep this thing in consideration. But for me, I'm expecting this market to pull back, establishing a signal here. But remember, always apply your Fibonacci in your trade. I wish you happy trading this week. Enjoy your trade. You can use the video to refine your method of trading.